Hi guys, Brown Asset Management here, and today I'm doing a stock review of Microsoft, ticker symbol MSFT, using my 6 simple steps. Stick around to the end of the video to see whether or not I think Microsoft is a buy in 2021. But first, please like and comment if you enjoy the video, and subscribe if you enjoy investing in personal finance videos. And now I'll give a quick summary about Microsoft. Microsoft is a technology company. The company develops, licenses, and supports a range of software and products and services and devices. The company segments include productivity, business processes, intelligent cloud, and more personal computing. Productivity and business processes include Office 365, Teams, Outlook, and LinkedIn. The intelligent cloud segment comprises of Azure, Visual Studio, and GitHub. And more personal computing includes the Windows operating system and the gaming side, Xbox. I'll quickly go through the share price here. As you can see, Microsoft is currently trading at $219. This time 5 years ago, it was trading at around $50 a share, so a great buy if you did it back then, and it's been going on an upward trajectory since then. Pre-pandemic, it was trading at about 185, and then hit lows of 137, and then since then it's gone on another great rise, sort of following the trend of the last 5 years to get to $120. Currently, Microsoft has a market cap of 1.65 trillion, making it the second largest company, only behind Apple. Over the last 5 years, it has increased from the fifth largest to briefly the first in early 2020, and then currently settling at second. So now I'm going to go through the 6-step process I use to help me determine whether or not I should buy a stock. These 6 steps include validating the PE ratio. Is the revenue increasing over the last 5 years? Is the profit increasing over the last 5 years? Are the number of shares outstanding decreasing? Are the current assets greater than the current liabilities? And is the free cash flow of the company increasing? Now let's have a look at the first step of the 6-step process, which is PE ratio less than 20. As you can see, Microsoft's PE is 35.2, which is considerably higher than the average of the S&P 500, historical average of the S&P 500, which has been around 15. This is very high, but does not mean that Microsoft is not a buy. It's just something that you do have to take into account. Step 2 of the 6-step process is increasing revenue. So you want to see if the revenue has been increasing over the last 5 years. So let's have a look at Microsoft's revenue. So revenue is the income generated from normal business operations. So let's see if this has increased over the last 5 years. In 16, it was 91 billion, and then in July 20, it is 403 billion. So there's a check mark there. It has increased over the last 5 years. It's increased over 56% these 5 years and has a year-over-year change of 13.65. So this is a massive pass. The latest total revenue came out in June 30, so this is not with the full year of the pandemic taken into account, and I believe that Microsoft has gone strength to strength during this time, so I would expect the revenue to keep on increasing. Now let's have a look at the second step, is profit increasing over the last 5 years. The net profit has increased from 25 billion to 53 billion, so that's an increase of 107% in this time and a year-over-year change of 20.4%. This is an even bigger pass again. Now let's have a look at shares outstanding. We want this to be decreasing because if the shares are decreasing, that means you have a larger amount of the company that you own. So if you own one share of a company where you had 10 shares outstanding, then you would own 10% of the company. If the company then created 10 more shares, or now 20 shares outstanding, you own now 5%, which has decreased the amount of you own of that company. So you want this to be decreasing or flat. In 2016, it was 7.8 billion, and now it's gone to 7.57 billion. So then once again, that's another pass. The fifth step is to check if the current assets are greater than the current liabilities. The current assets represent all the assets of a company that are expected to be sold and used and consumed and exhausted through standard business operations within 1 year. The current liabilities are a company's short-term financial obligations that are due within that 1 year. As you can see, the total current assets of Microsoft are 181 billion, whereas the total current liabilities are 72 billion. This is a massive check as they can pay off all of their current debts with their current assets. But let's also check what their total liabilities are. The total liabilities of Microsoft are 183 billion, so they can almost pay off their complete liabilities, all of their debt, with their current assets available. This is a massive, massive check in the market. Again, this is great news, and I think there's maybe even a double tick for current assets greater than current liabilities. Now we want to have a look at free cash flow, and has this been increasing over the last 5 years? So to get free cash flow, what we want to do is you want to get the cash from operating activities minus the capital expenditures, and has this been increasing over the last 5 years? The free cash flow has increased from 24.99 billion to 43.25 billion. So once again, this is a massive check mark. The company is currently selling around 36 times free cash flow, which is pretty high, but definitely ticks a lot of the boxes here. If you were to buy this company earlier in the year, it would have been a solid investment and it would have been a no-brainer, as by the fact that it's gone up in that time. So the financials came out in June. If you want to go again to the share price, if you were to buy in June, you would have been able to buy Microsoft for around about $180 a share, and you would have made $40 per share in that time, which is a great purchase. Let's have a quick look at the dividend. I know people won't be massively interested in the dividend as they'll think that Microsoft is a growth stock and doesn't even pay a dividend. But as you can see here, that Microsoft does actually pay a dividend. It has a yield of 0.93%. That is a dividend amount of around 56 cents a share. The annual dividend is $1.99 per share. This has been increasing over time, which is good. And the payout ratio is quite low, around 33%. The ex-dividend date is February the 17th, 2021, which means if you buy 10 shares before that date, you'll be eligible for the next dividend. As mentioned before, the free cash flow is 45 billion and the total dividend is 15 billion, so the dividend is definitely safe. Let's quickly summarize the 6 steps. PE ratio was a fail. It was 35, which was greater than 20, so that is a fail. The revenue has increased from 91 billion to 143 billion, which is great. The profit has increased from 25 billion to 53 billion. The shares outstanding has decreased from 7.8 billion to 7.57 billion. The current assets are substantially greater than the current liabilities, with 181 billion to 72 in liabilities, and the current assets can almost pay off the entire liabilities of Microsoft, which is 181 billion to 183 billion. Finally, is the free cash flow increasing? The answer is yes. It's gone from 25 billion to 45 billion over those 5 years. We can have a look at the analyst rating to see what they're saying, and the analyst rating currently is a buy with a target of $241.21. 32 analysts are buying, 2 are holding. Nobody's selling Microsoft at the minute. Do I think you should buy Microsoft in 2021? I'd say my answer would be yes. I do think Microsoft has still massive growth potential. I think it's still increasing profit, it's still increasing revenue. They're buying back their shares, they're doing the correct things with the money. Their cloud computing is only increasing. They're a company that's doing very well under the pandemic, and I don't think if anything goes back out of the pandemic, if they go back to the old ways, Microsoft would be affected in any way. I think the Microsoft CEO, Satya Nadella, has put the company in a great place after taking over from Steve Ballmer. The share price has rocketed with him. I do have a current position in Microsoft, which is around 6 shares with an average price of $214.67. Right, guys, that is my stock analysis of Microsoft. As stated, I do think Microsoft is a buy in 2021 and definitely can grow in the future. Please give me a like if you enjoyed the video. Please comment your thoughts on whether or not you think Microsoft is a buy in 2021. Subscribe to the channel if you're interested in personal finance and investing, and I'll see you guys in the next video.